Adiel Gorel has helped thousands secure their retirement riches. Even the great Warren Buffett wrote him needing to know more. The answers are all here for you. Welcome to the Remote Control Retirement Riches Show.
How can I ensure that my capital is protected in a down market? Now, here is a loaded question. I could talk for at least an hour on this, so I'll try to be concise. Let's go back to the most extreme example of a down market that existed almost in the past 90 years, if not 100. We had a major boom in the United States in many markets, 2004, 2005, 2006, and then we had a giant recession, 2008, 2009, 2010, even 11. So we have seen properties that went up like crazy and then they went down like crazy. So I'm going to choose even one of the most extreme markets in the country where my investors bought more than 3,000 properties over more than 20 years, the Phoenix, Arizona metropolitan area, or as we like to call it, Maricopa County. So here is an investor who bought a brand new home in Phoenix in the year 2001. They bought a brand new beautiful home for $150,000. They put 20% down, which is $30,000. So they had a $120,000 loan. Then in 2004, 5, and 6, the property skyrocketed to a value of $320,000. The loan remained fairly close to 120. It went down a little bit, maybe 115. Okay? The investor obviously was very happy because, they put only $30,000 down, and now they have a house worth $330,000 with a loan of $115,000. That's a nice feeling. And then came the big recession. And Phoenix actually was one of the most extreme markets. And let's just, for my example here, say the value of the property plummeted from $320,000 to $100,000. So here is that, as an investor, he has a property that at least now, this is now 2009, let's say, is worth $100,000, and it has a loan of $115,000. They call it underwater, yes, where the loan is worth more than the house. Now, if the person tosses and turns and hems and haws, and I can't tolerate having a property that's worth less than the loan, that's it. I'm giving it back to the bank. That's it. Foreclose, Mr. Bank, take it away from me, as we have seen so much. That would be a wrong move. What would be the right move? And I'm not saying it took me decades to learn this. The right move during a down market is to do, once again, as I like to refer to it from time to time, the hardest action for a human being to do. Nothing. Do nothing. So now let's look at two people. They both bought this house in 2001 for $150,000 brand new, had a $120,000 loan. 2009, the home plummeted to $100,000. And they were under. One of them gave the home to the bank. That's it. I couldn't take it. I couldn't sleep at night. The other one did the magic act. He did nothing. Real numbers now. In 2022, that home is worth, are you ready for it? $525,000. The loan balance now is about $70,000. And by the way, to make the story even more dire, each of those two people bought 11 houses. Compare. One of them, the credit went bad and there's nothing. The other one, a net worth of $5 million just on the strength of these 11 houses. They bought other just because, and the rents went up, not as crazy as the prices, but they went up significantly. So a humongous positive cash flow, not to mention 11 homes that are worth $525,000 with a loan that's $70,000. They sell 2 homes, pay capital gains, pay off, the other tiny little 9 loans. Now they have 9 free and clear homes. They retire, they're done. Each home is rented for more than $2,000 a month. They're done. So do nothing. Now, I've been through several recessions, booms and busts. And I can tell you in a very counterintuitive manner, during a recession, during a down market, the rentals are the best and the safest and the most stable. Why? Because suppose you have a home and there's a family that's renting it. That family has been dreaming about buying their own home. They've been saving up for a down payment, and they were just ready to tell you, we're not going to renew the lease. We're giving notice. We're buying our own dream home. And then a recession happens. There's a conversation in that home. The conversation mostly starts with the word honey. It goes, honey, we were planning on buying a home. We ain't buying no home because I could lose my job. You could lose my job. There's a recession. There's a downturn. Look at the media. The sky is falling. Media says the sky is falling. Okay, so we are very scared. Our plans to buy a new home are shelved indefinitely. And yet, here we are, living in this house. Our kids go to school. Guess what we do? We remain tenants. Multiply this story by several million times, and that's what happens during a downturn. So now it's even more of a wise thing to do nothing. You're getting stable, good rents. The house is well rented. You sit back and you do nothing. Trust me, I didn't learn this wisdom in one day. It cost me large amounts of money, looking a little bit like investor number 1 until I learned to be like investor number 2. It's a very important point, very critical point. By the way, just for the completeness of the point, when are the rents the least stable, the least reliable? During a big boom. Because in 2004, 5, and 6, the media was saying, my God, people are buying a home and selling it, flipping it in 2 months for $100,000 more. Your tenant saying, honey, we're buying a home. We are not renewing the lease. So the rentals are the weakest during big booms, but then it's hard to complain because your property is doubling in value. By the way, why didn't the rentals become unreliable and weak during the big boom, during the pandemic of 2020, 2021, 2022? Because of supply-demand issues. Renters were scared to rent in apartment complexes and share the same stairs and elevators with everybody else with the virus. Everybody wanted a home with a yard and room for a home office because many people can now work from home. So there was so much demand and not enough supply. That phenomenon of the weaker rents didn't manifest. There's a shortage of rentals. In fact, during the big boom in prices, rents are booming too. Rents are skyrocketing nationwide now. That's an exceptional situation. But once again, to summarize, how can I ensure my capital protect? Do nothing. It's not easy to do nothing. But if you master the art of doing nothing, you could have a very strong future. Of course, we'll be covering it in one of our quarterly events. The next one is upcoming, and you can register for free on our website, icgre.com, under events, and we are looking forward to seeing you there. Thanks for joining me today. Click the subscribe button for more video on real estate. Got a question or comment? I love questions and comments. Leave yours below. And here's another video you've got to see.